Welcome to Maner Costerisan's 2021 year-end payroll and 1099 update. I'm Tony Horsch, Senior Accounting Specialist, and I've been doing payroll for, let's just say, over 10 years. And I'm joined today by Senior Manager Jessica Fleet and Associates Renee McNutt and Courtney Kelterborn. We make up the payroll tax team in our Accounting and Outsourced Solutions Department. And we're going to attempt to fill the shoes of Mike Weller, who is our longtime payroll guru, who many of you know, who retired this year. Our contact information is on the next slide here. So please feel free to reach out to any one of us if you've got questions. So here's an overview of what we'll be covering. First, we'll talk about wages and fringe benefits. Then we'll talk about 1099 forms and vendor payments, then form due dates and annual limit changes, and COVID provisions. This isn't meant to be exhaustive to cover every detail of year-end payroll taxes, but I wanted to mention where you can get more information. The IRS website is a great resource, especially publications 15, 15A and B. Those go into good depth on the rules, how to pay your taxes, all kinds of information on what's taxable, what's not. Also, your state website, so here in Michigan, michigan.gov/treasury or michigan.gov/UIA. And then, of course, you've got other states that you can take a look at. Your local governments would be important if you ever have questions about city withholding, local withholding. They would give you more information there. Some trade associations or the American Payroll Association would be a good resource as well if you're looking for training. I know American Payroll Association has a lot of good training, or if you're a CPA or even just want to go to the state CPA Association, they've got training that you can attend. And then, of course, Maner's team is here to help. We have such a wide range of expertise at Maner, and I just love to tell people that, ask the question. If I don't know the answer, I certainly don't know a lot of things. And so I can always find somebody that will know the answer. So that's the great thing about Maner. We've just got a lot of people that know a lot. We get a fair number of questions. First of all, wages and fringe benefits. First thing I want to mention was don't put off paying your taxes. I just thought I'd throw that in there. I know sometimes we like to scare people, but we would say that the IRS should really be at the first in line when you have to pay bills. We understand there's a lot of juggling and cash flow can be an issue, but you definitely want to put IRS first or any of your state or local taxing authorities. Basically, if it's a mistake, we can say, it was just a mistake and try to get out of that. But if it's a pattern, the IRS penalties definitely are designed to put you out of business. So we really don't want to see you end up getting any kind of penalty notices. Then next, the independent contractor or employee, we do get that grass is always greener syndrome where we see, employees that, can't I just be an independent contractor? I won't, because they are thinking, well, then I'll get more take-home pay. They won't have to pay any tax in. But what happens is, for one, you just can't do that. There's factors to take into consideration. But what happens is when they are an independent contractor, then they find out, time to file my 1040, no taxes paid. Oh no, I've got this big tax bill. Then, then of course they want to switch back. So just know that the IRS's goal is to convert as many people to employees as possible so that they can collect as much money right away as possible. So there is definitely an appropriate time to have an independent contractor. If you want to look at IRS Form SS8, that gives you kind of the factors the IRS looks at. So like I said, it's a common question from business owners to, what's better to put them on as an independent contractor or an employee. So you definitely would want to have most of those factors met on the SS8. The SS8 is really meant to send it in to get a ruling from the IRS, but I wouldn't advise that unless you really, really need a ruling, but at least look at it. They don't give you a clear, defined, here's the number of factors to meet in order for it to be an independent contractor. So it's, for some reason, they just don't give you that, 10 out of, if you meet 10 of these, then it's definitely this or definitely that. But take a look if you've got questions about that. Then also we get a lot of questions about the new W-4. It's been around for a couple of years now. The 2022 version has not been released yet. So the packet we're going to email to everybody will have a version of that, I believe. We just get a lot of questions from employees. If you have them fill that out, you can't give them tax advice. You can't give employees tax advice, but you can kind of explain how it works. So for one, if you don't get a signed W-4, to make it a valid W-4, it doesn't need to be signed. So just know that. If you don't get one at all, you need to tax them as single. And so what's different is that there's no exemptions. And I think probably most of you already know that, but you really sit down and look at it. It's kind of strange because there's no exemptions. But what happens is they can claim a dollar amount for their children or other dependents. There's a dollar amount that basically what that's doing is it's reducing their tax liability by that amount on an annual basis. And the same, if you want to increase your withholding, there's a section for that as well. And here's a kind of not a great look at it, but this is the example. So step 2 is where they would claim, the number of dependents. And what it does is it would take the total dollar amount, divide by the number of pay periods, and it would reduce their withholding by that amount. And then the next step would be where you increase if you want to increase your withholding. And so the best advice really is, to have them go through the worksheets, base it on, what was their tax liability last year. It's complicated though. It's, for some reason, it's just not the easiest to use. Oh, I should just quickly go back to the W-4 really quick. So you can have them, if they want to claim exempt and not have withholding at all, that is in the instructions, and they just write in exempt under step 4. That's how the instructions read. But if somebody is claiming exempt, they have to fill out a new W-4 every year by February 15th. So you want to make sure they do that, or you're back to having them be single until they give you a new W-4. All right, so what's taxable? There's a lot of different benefit packages offered and different types of income. But basically, the way to look at it is everything's assumed taxable unless there's a specific exception by the IRS. And those publications, 15A, really, they mention a lot of good examples of specific types of income. There really isn't a de minimis with the IRS, especially cash or gift cards. The technical answer is there isn't a de minimis, so it's kind of again a gray area. If it's a non-cash fringe benefit, then they say, if it's a small amount that isn't easily accounted for, that would just be a burden, to account for it, then it's de minimis. But if you look at 15A, publication 15A, that really goes into depth on that. All right, so here's a list of common examples of what to think about for year end. And this is a good time to just kind of review kind of what employees have, what needs to be captured on their W-2s. So employer paid group term life insurance of over $50,000 in coverage needs to be added to W-2s. Personal use of a company car or aircraft. I don't know if anybody has a company aircraft, but if so, that too would need to be captured and put on the employees' W-2s. If you're an S corporation and if there's a greater than 2% shareholder in the S corporation, their health, disability, long-term care premiums, and health savings contributions are taxable and need to go on their W-2. Employee achievement awards, gifts and prizes, those are taxable. If you have a length of service award that could be excludable, there's examples in the publications of how it can be excludable. It has to be basically like a written plan that everybody participates in. Employer paid moving expenses taxable. They did make a change a few years ago on that. The only time it's not taxable is if they're an active duty military, and there's still rules regarding that. So look at the IRS rules. And then third party sick pay. That's a common one that we don't always think about when it's happening. So if any employee was covered by your third party sick insurance and they were paid during the year, the chances are you would probably need to add that to W-2, but it really depends on how your agreement with the insurance company is structured. And they should have, if there were payouts during the year, they should have sent you documentation that really spells it out. But if you're not sure, let them know, call and ask them. And there is exhaustive details about the third-party sick pay in the IRS publication 15A. So that's very helpful. Some common non-taxable fringe benefits or payments would be employee business expense reimbursements if you're on an accountable plan. So if they're turning in receipts, no problem, that's not taxable. If it's something like just like a monthly auto allowance, and you're just writing them a check for $200 a month to cover their vehicle cost, that is taxable unless you're making them account for the mileage and turning in receipts for anything else. Employer paid student loan debt up to $5,250 if you have a qualified plan. That would be considered non-taxable, and I would just contact or consult the IRS publications to know what the qualifications are to make that a qualified plan. And then there's qualified transportation and parking benefits. So if you're giving them bus passes or if you're paying for their parking, there are limits to it. And so just consult what those limits are. Okay. And then, so now once you determine what is taxable and what you need to add, basically you would need to calculate the value. And so there's a worksheet. If you did receive the year-end packet, if we do your payroll taxes, you would have gotten a worksheet for that. I can make sure that we get you the worksheet or have it included in the year-end handout that we are going to distribute. So basically it's based on total miles on the vehicle and then the personal miles, and commuting is personal. So that's sometimes a question they don't realize. If you're driving to work, that's personal. Group term life insurance coverage over $50,000 is calculated based on age, and that calculation would be in IRS publication 15B. So sometimes if you don't have the amounts to add to the W-2s in time to add it to the last payroll of the year, you might have to gross up the value of the benefit. And so, or you might choose to, instead of making the employee pay the tax, you might choose as an employer to pay both the employee and employer Social Security and Medicare. And so we would gross that up, where it's basically you're creating a payroll check that nets to zero net pay, basically. And so the calculation for that, if you're just doing Social Security and Medicare, if the employee has not gone over the Social Security limit, then you can just divide the value by 0.9235, and that gives you the gross pay. And then you would just take out the Social Security and Medicare for that. If it is, if the employee is over the Social Security limit, it does get a little more complicated, and we can help you, with that calculation, no problem at all. All right, and so next, Courtney Kalterborn is going to talk about 1099s and vendor payments.
Okay, hi everybody. Thanks, Tony, for taking us through the wages and fringe benefit information. Like she said, my name is Courtney Kalterborn. I'm an associate at Maner Costerisan, and I've been here for about 2.5 years now. In this next section, I'm going to be going over kind of the basics of 1099. So what are they for, who should get one, and so on. So let's start with who should receive a 1099. In very broad strokes, you're generally going to need to issue a 1099 to anyone who was paid non-employment income of $600 or more during the year. So let's kind of dig in a little more to like what that means and what that looks like. So some common payments made during the year that would require a 1099 be issued would be payments to non-employees for providing services. So for example, any freelancers or contractors you worked with during the year would need a 1099. And kind of one way to think about it is that if someone's providing services to your business and you don't send them a W-2 at the end of the year, you're probably going to need to provide a 1099. So in addition to any non-employees that provide services to the business, any non-incorporated companies that provide services would also need a 1099. So like any LLCs, anything that doesn't end in INC, if they're providing services, they're potentially going to need a 1099. And then also any rent or royalties that you pay to non-incorporated companies would also require 1099. So if you're paying rent to a business that isn't incorporated, like the rent for the building that you operate out of, then you're going to need to issue them a 1099. And then another common one would be for payments to attorneys or law practices. So the filing threshold for a 1099 in most cases is going to be if the payments that you made to that vendor were $600 or more during the calendar year. There's a couple exceptions where the filing threshold is going to be a little bit lower, but we'll talk about those a little bit later. And it is based on the calendar year. So even if you operate on a fiscal year, the amount paid is going to be determined from January 1st to December 31st every year. And it's also important to remember that it's only payments that you made during the year that count towards that $600 threshold. So let's say you paid a vendor $599 during the year, and then on December 31st of 2021, they give you another bill, but you don't pay that until January 1st, 2022, then that wouldn't count towards meeting the $600 threshold in 2021. So in the examples we looked at above, you can see that in most cases, 1099s are going to be issued either to individuals or non-incorporated businesses, but there are some cases where corporations would receive a 1099. So in the case of payments for legal services, it doesn't matter if the law firm is incorporated, they would still receive a 1099. And then the same thing with payments for healthcare services or medical billing and collections, you would still issue 1099s for those payments, even if the vendor is a corporation. So let's look at some common 1099 forms that you might need to issue. Probably the most common ones that we see are the 1099 NEC and the 1099 MISC forms. And those have changed a little bit in the last couple of years. So I just wanted to take a minute to look at the difference between the two forms. So the 1099 NEC was introduced in 2020, and NEC stands for non-employee compensation. So that form is going to be used for any non-employee compensation paid to vendors during the year. So like your contractors and freelancers are going to fall into that category. And then the non-employee income did used to be reported on the 1099 MISC, which is the 1099 miscellaneous, but now you shouldn't have any non-employee compensation on the miscellaneous form. So the common things that you would use the 1099 miscellaneous for would be rent payments and royalty payments. And then just something to note with the 1099 miscellaneous, if you're reporting royalty payments made during the year, instead of that $600 filing threshold, if you make more than $10 of royalty payments during the year, then you would need to file a 1099. So that's one instance where the threshold is a little bit lower than that $600 typical one. And also payments to attorneys might be reported on either the 1099 non-employee compensation, the 1099 miscellaneous, or both. So fees paid for legal services would go on the 1099 non-employee compensation form. But if you do a payout to your attorney during the year, then that goes on the 1099 miscellaneous form instead. Another common form would be the 1099 DIV or the 1099 dividend form. So that would be used for any dividends or distributions paid to business owners or shareholders during the year. And then we also see some of the 1099 INT or interest forms to report interest paid. And then again, the limit there is any interest paid in excess of $10. So that's again lower than the $600 threshold. So some other forms that are associated with the 1099. So for every 1099 type that you file, you'll also need to file a 1096, which is just a summary of the information that's on the 1099s. So let's say you send in a batch of 25 1099 non-employee compensation forms. You would also need to file one 1096 form where you would check off that this 1096 is for transmittal of a batch of 1099 non-employee compensation forms. You put the total number of forms that were filed and then the total amount of payments that was reported on those 1099 non-employee compensation forms that are being filed with it. And you would need to do that for every type of 1099 that you file. So if you have, say, 25 1099 non-employee compensation forms and then also 5 1099 miscellaneous, you would end up with 2 of the 1096 forms, so one for each type of 1099. Another form that's going to be needed for filing 1099s is the W-9 form. So the W-9 is used to collect the vendor information that's going to appear on the 1099 at year end. So legal name, address, and then a taxpayer identification number, which would be the social security number for an individual or an employer identification number if the 1099 is for a business. And it's best to get your W-9 forms as early as you can. Like if possible, I would request a 1099 when you make the payment to the vendor if you know that you're going to need to issue them a 1099, because a lot of these 1099 due dates come up pretty fast at the end of the year, and it's not fun to be trying to track down a long list of vendors in January trying to get a W-9 from them. If a vendor refuses to give you a W-9, the recommendation from the IRS is to withhold payment because you won't be able to file the 1099. But if you do issue payment to the vendor and then you're not able to get their taxpayer identification number, it's best to just not file the 1099 at all, because if you do file the 1099 without a taxpayer identification number, then you're going to get a penalty for improperly filing the form because it's missing that information. You can also keep track of 1099 vendor information in your accounting software throughout the year. So just to kind of keep things neat for year end, if you use QuickBooks Online or QuickBooks Desktop, then when you set up a new vendor, you're able to select them as a 1099 eligible vendor and then record their taxpayer identification number right on their vendor card in the system. And then if you use Intact, you can also attach a scanned copy of the W-9 that you receive from the vendors and then save that with their vendor file in Intact. If you are using an accounting software to track 1099 vendors, there's usually a report that you can pull at year end that will show you all the payments that you made to vendors that you indicated were 1099 eligible. And that can kind of help you prepare your 1099s to have all that information in one place. But if you're doing that, I would still recommend reviewing either your general ledger or a list of payments made during the year, just to make sure that the report picked up everything, just in case, maybe you missed checking somebody as a 1099 vendor, the payment got tagged to the wrong vendor file. It's best to just look over all the payments at year end and make sure that everyone's getting a 1099 that should be. If you need any assistance with 1099s, you can reach out to like the account manager that you usually work with or anyone on our payroll tax team, and we can assist you with whatever you need. So if maybe you know who should be receiving a 1099, you can send us that information and we can just process and print the forms if you don't want to have to like deal with that part of it. Or if you need help with the whole process, we can review your books and determine which vendors will require a 1099 and then process and print the forms as well. 1099 processing is also one of the items on that year-end letter that account managers send out if we assist with year-end payroll. So you should be receiving that soon if you haven't already. It's best to send that information to us as early as possible because especially for the 1099 non-employee compensation form, that deadline comes up pretty fast after the end of the year. And on that note, I'm going to hand it off to Renee to talk about form due dates and the new 2022 annual limits.
Thanks, Courtney. I'm Renee. I've been an associate here at Maner for about 3.5 years, and I'll be covering the form due dates and annual limit section today. So up first, we have some important deadlines. Once January 1st comes around, employees are always eager to get their hands on their W-2. As an employer, obligation is to have W-2 submitted to both employees and the Social Security Administration by January 31st. This is regardless of filing method. It is also important to note that the IRS currently requires employers with 250 or more W-2s to file electronically. There is a discussion that that threshold will be lowered in the near future. And then touching on 1099 deadlines, 1099 non-employee compensation or NEC are due to both payees and the IRS, again, regardless of filing method, to the IRS by January 31st. And then 1099 miscellaneous are due to payee by January 31st and to the IRS by paper filing methods on February 28th or filing electronically by March 31st. Next, I'm going to discuss a few of the annual limit changes for 2022. The Social Security wage base has jumped quite a bit from $142,800 to $147,000. However, the tax rate has stayed the same for both Social Security and Medicare. Also, the employee Medicare tax wage threshold is staying the same at $200,000. This tax only pertains to employees who have wages over $200,000. Once they reach that threshold, they pay an additional Medicare tax of 0.9% on their wages. So a few more annual limits to touch on. The increase in 401k and 403b limits from 19,500 to 20,500. However, the catch up for those 55 or for those over 50 stays the same at 6,500. Some simple deferrals has an increase of 500 to 14,000. And lastly, the individual HSA increased by $50 to $3,650, and the family HSA increased by $100 to $7,300. These are just a few of the common benefits that we usually receive questions on. If you're looking for a more comprehensive list, that will be included in the packet that we end out at the end of this call. And then here we have I've listed the state unemployment insurance taxable wage basis for a few of the common states we have clients in. I just wanted to quickly note that we did receive a question regarding Ohio tax prior to this webinar. There wasn't a name included on it, so whoever submitted that question, please feel free to reach out either in the chat or to one of our emails. And we are more than happy to answer those questions offline as they don't pertain to the majority in attendance. Out of the list included, Kentucky is the only state with an increase expected in 2022, and it is by $300, bringing the state unemployment taxable wage base up to $11,100. Michigan has yet to release what the taxable wage base is. The best place to check on that is online at michigan.gov/UIA. And then the new rate will be posted there once it's been decided on. And then, of course, as a reminder, come December 31st, a notice of determination from the UIA will be sent to you to inform you of your 2022 rate. It is extremely important to update your payroll software for this new rate before processing your first payroll in 2022. Or if you have a payroll provider such as ADP or Paychex, it's important to upload that notice to them as well so they can account for it. And then up next, we do have Jessica with some COVID payroll provisions.
Thank you, Renee. I'm Jessica Fleet, and like Tony mentioned, I'm a senior manager here in our accounting and outsourced solutions department. And I also am part of our COVID response team at Maner. So I'm going to go over some of the COVID provisions, but specifically as they relate to payroll and payroll related items. So in terms of 941 reporting, these are for fourth quarter and any potential amendments after fourth quarter as well. So we'll start with the qualified sick and family leave wages. So this is EPSLA in 2021, which stands for Emergency Paid Sick Leave Act. This was formerly known as FFCRA or Families First Coronavirus Response Act in 2020, but the wages operate the same. So this was for any wages that in which an employee or their family members were sick because of the coronavirus and had to take time off. This ended on 9/30 of 2021. However, there may be some carryover into the fourth quarter 941 return if there were wages that on or before 9/30, but were actually paid in October. So there may be some reporting requirements there because of that. I would advise you to use any credits you have and any carryover from a prior period now, so that way you can start the year off clean, and any credits that you did have or will incur in fourth quarter because of carryover from the EPSLA wages, just use those credits now. And so when I say use those credits, I mean reduce any future payments for the payrolls that you have in December by the amount of those credits. For Social Security tax deferral, this is in reference to employer paid Social Security from March 27th through December 31st of 2020, in which an employer could have elected to defer payments until 2021 and 2022. So at least 50% of any deferrals are due by 12/31 of 21, and the second half is due by 12/31 of 2022. You certainly can make those payments ahead of time, but if you don't pay 50% by 12/31, 2021, be aware that you will be subject to failure to pay penalties in accordance with section 6651 of the IRS code. So if you are going to make a payment, if you are, make sure that you're paying at least 50% of your deferral by December 31st of this year. And then we have the employee retention credit, which is a popular topic over the last year, of course. So just want to mention that as a result of the Infrastructure Investment in Jobs Act that was just passed in the last couple of weeks, the employee retention credit will end, or it did end on September 30th. So there are exceptions for recovery startup business who would be eligible automatically for the credit in third and fourth quarter of 2021. You do have 3 years to file a 941X return if you did not include the credit on the original 941. So it's definitely not too late. Please let us know if you would like to pursue the credit, even if you did receive PPP funds. Late in 2020, they passed an act that allowed you to use both to receive benefit for both the PPP loan and the employee retention credit. And we can determine eligibility, which is based on either a shutdown period or a gross receipts test. You can qualify based on one or both of those qualifications there. Keep in mind that ERC is taxable money. And if you are filing a 941X yourself, please use the most updated version, which has a date of July of 2021. And over the last couple of months, we've noticed a lot of clients that have received notices from the IRS based on timing differences between when they're filing the 941 and the 941X and how they're using credits and things of that nature. So please be aware of those. Please send any notices to your account manager if you do receive them. And if you do receive a check from the IRS, we actually would encourage you not to cash that check. But again, work with your tax manager when you receive it, so that way we can help you determine the best course of action what we're noticing is that on these forms, even if you're asking for a carryover into the next period, the IRS is eventually sending a check for that money instead. And you may have already used the credit by reducing any tax liability on a 941 form and your payments, your federal tax payments. So then that causes some issues with future notices and what you've reported on a 941 being incorrect because of these checks being sent out. So certainly just let us know on those. So that concludes the COVID provisions. So thank you for attending our session today on payroll tax updates. And if you have any questions as a result of anything that we've mentioned today, and when you receive the booklet in the email and have time to review, please let us know. Happy to work with you to wrap up 2021 and all the tax filings that will occur into 2022 for 2021. And again, our contact information is here on the screen. So thank you again and have a great day.